If you've been wanting to start investing but have no idea where to begin, Robinhood is honestly the easiest place to start in 2026. And in this video, I'm walking you through every single step, from creating your account to buying your very first stock. And I'm showing you the 3 mistakes that trip up nearly every beginner, so you can avoid losing money before you even get started. I'm not wasting your time with theory. This is a complete click-by-click walkthrough. By the end of this video, you'll know exactly how to get your account funded, how to find and buy a stock, and most importantly, how to do it without making the costly errors I see all the time. Here's what we're covering. First, the fastest way to set up your Robinhood account and get verified. There's actually a trick to speed this up that most people miss. Second, the smartest way to deposit money, including a funding method that protects you from impulsive trades. And third, the one interface mistake that causes beginners to accidentally buy the wrong stock or pay way more than they should. Missing even one of these could cost you real money. So let's get into it. Before 2013, if you wanted to invest in the stock market, you had to call a broker, pay them $7 to $10 per trade, and honestly, it felt like investing was only for people with thousands of dollars. Then, Robinhood flipped the script. Zero commission trading, simple app. Suddenly, anyone with a smartphone could start investing with as little as $1. Fast forward to 2026, and Robinhood's evolved even more. Better education tools, more intuitive interface, fractional shares that let you buy a piece of expensive stocks like Amazon or Google without needing thousands of dollars. But here's the thing. Just because it's easy to use doesn't mean it's easy to use correctly. Most beginners make the same 3 mistakes in their first week, and one of them can actually lock you out of trading for 90 days. Let's make sure that doesn't happen to you. Step number 1, creating your account. All right, let's get you set up. Download the Robinhood app from the App Store or Google Play. Do not download any knockoff apps. There are scammers out there. Make sure it's the official Robinhood Financial LLC app. Tap Sign Up and enter your email, phone number, and create a password. Use a strong password. This is your money we're talking about. Next, your legal name and social security number. I know, it feels weird, but this is required by law. Robinhood has to verify your identity because they're a regulated financial institution. Then answer the basic questions. Your address, date of birth, investment experience. Be honest here. It doesn't affect your ability to open an account. Now here's the speed-up trick. When it asks you to link a bank account, do it right away instead of waiting. Robinhood verifies your account way faster if you connect your bank during setup. Use your login credentials for instant verification rather than the manual routing number method. Within a few minutes to a couple hours, you'll get approved. You'll get a notification when you're ready to start trading. Step number 2, how to deposit money the smart way. Your account's live. Now you need to fund it. But here's where beginners make their first mistake. They see instant deposit and immediately transfer $1,000 or more, thinking they need a huge amount to start. Then they panic buy a stock they don't understand because they feel pressure to put the money to work. Don't do that. Here's the smart approach. Start small. Deposit $50 to $100 for your first trade. Robinhood lets you start with as little as $1 thanks to fractional shares. But $50 to $100 gives you enough to actually learn without risking serious money. Go to your profile icon, tap Transfers, then select Deposit. Choose your linked bank account and enter your amount. Robinhood offers instant deposit up to $1,000, which means you can trade immediately, even though the actual bank transfer takes 3 to 5 business days. Pro tip: set up recurring deposits if you want to invest regularly, say $25 every week. This is called dollar cost averaging, and it's one of the smartest strategies for beginners because you're investing consistently, regardless of whether the market's up or down. Step number 3, understanding the interface. Before you buy anything, you need to know where everything is. This is where that costly mistake I mentioned happens. When you open the app, you've got 3 main areas. Home tab on the bottom left. That's your dashboard. You'll see your portfolio value, any stocks you own, market news. Search icon, the magnifying glass. This is where you find stocks to buy. Search by company name or ticker symbol like AAPL for Apple. Account icon on the bottom right. Your profile, settings, where you manage deposits and withdrawals. Now, here's the interface mistake that gets people. When you search for a stock, Robinhood shows you a price chart. Above the chart, you'll see buttons like 1D for 1 day, 1W for 1 week, 1M for 1 month. New investors see the stock going up on the one-day chart and think, it's going up, I need to buy now. But if they'd tapped 1Y to see the one-year chart, they'd see the stock is actually down 40% and they're buying at a temporary spike. Always check multiple time frames before you buy. Don't let one day's movement trick you. Step number 4, how to buy your first stock. All right, here's the moment you've been waiting for. I'm using Apple as an example, but you can follow these exact steps for any stock. Tap the search icon and type Apple or AAPL. Tap on Apple Incorporated. You'll see the stock price, a chart, key stats like market cap and P/E ratio. Don't worry about those yet. Tap the green Trade button at the bottom. Choose Buy, not Sell. That's for when you already own the stock. Now here's the critical choice: shares or dollars. Shares means you're buying a specific number of shares. If Apple's $180 per share and you buy 1 share, you pay $180. Dollars means you're buying a dollar amount of stock. If you invest $50 and Apple's at $180, you'll own 0.28 shares, a fractional share. For beginners, I recommend dollars because it lets you invest exact amounts and you're not forced to buy a full share of expensive stocks. Enter your amount. Let's say $50. Choose your order type. Market order buys the stock immediately at the current price. This is what most beginners should use. Limit order lets you set a maximum price you're willing to pay. If the stock never hits that price, your order won't go through. That's for more advanced traders. Review your order. Make sure the company name's correct, the amount is what you want, and you're buying, not selling. Swipe up to submit. Done. You now own stock. You'll get a confirmation screen, and the stock will appear in your portfolio on the Home tab. Step number 5, how to sell when you're ready. Eventually, you'll want to sell, either to lock in profits or cut losses. Here's how. Go to your Home tab and tap on the stock you own. Tap the green Trade button. Choose Sell. Choose Shares or Dollars again. If you want to sell everything, select Shares and enter the number you own. If you want to sell a portion, you can sell by dollar amount. Review and swipe up to submit. The money goes back into your Robinhood buying power. If you want to withdraw it to your bank, you can do that from the Transfers section. Just remember, it takes 3 to 5 business days. The 3 biggest mistakes to avoid. Now, here are those 3 mistakes I promised you. Mistake number 1, day trading without $25,000. If you buy and sell the same stock within the same day, that's called a day trade. If you do this 4 times in 5 business days and your account's under 25 grand, you'll be flagged as a pattern day trader and your account will be restricted for 90 days. Solution? If you're a beginner with a small account, don't day trade. Buy stocks you plan to hold for at least a few days or weeks. Mistake number 2, chasing hot stocks without research. I see this all the time. A stock's up 30% in one day, beginners FOMO in, and then it crashes the next day. Never buy a stock just because it's going up. Do basic research. Read what the company does. Check if the price spikes based on real news or just hype. Mistake number 3, not using limit orders on volatile stocks. Some stocks swing wildly in price. If you use a market order during high volatility, you might pay way more than you expected. For volatile stocks, use a limit order to control the maximum price you'll pay. All right, here's what you need to do next. Buying your first stock is great, but if you want to actually build wealth, you need to understand which stocks to buy and how to build a diversified portfolio. That's exactly why I made this video right here on how to pick your first 3 stocks as a beginner. It walks you through the exact research process I use, and it'll save you from buying stocks that tank. Click right here to watch it next, and I'll see you there.